Would you rather invest in Fund A, delivering a 12% CAGR but causing sleepless nights? Or choose Fund B, offering a 9% CAGR with peace of mind? Sounds like a no-brainer, right? Yet, most investors still chase Fund A, drawn to the higher return, without asking one crucial question. At what risk? Enter the information ratio, IR, a metric that doesn't just tell you how much you earned, but how smartly you earned it. What is the information ratio, IR? You invest to earn good returns, but good doesn't just mean high. It means earning enough while keeping risk in check. That's exactly what IR helps you measure. Think of it like fuel efficiency in a car. Two cars may go the same distance, but one might consume far less fuel. Which one would you pick? IR ensures you're not just growing your money, but growing it wisely. The formula simplified. Don't worry, we won't throw complex math at you. Here's how IR works. Portfolio return minus benchmark return divided by the standard deviation of excess return. Think of two funds. Fund A returns 12% CAGR and Fund B returns 10% CAGR. But the first fund had wild swings, while the second was steady. Which one feels safer? That's what IR reveals. A fund with a higher IR isn't just growing your money, it's doing it wisely, with fewer surprises along the way. Let's say two funds give 12% CAGR and 10% CAGR returns. Which one's better? Instinct says the 12% fund, right? But what if the first fund had wild ups and downs, while the second delivered steady gains? IR helps you see beyond the surface. Smart investing isn't about chasing the highest number. It's about finding funds that make the most of every risk taken. A fund with a strong IR shows discipline, strategy, and a commitment to protecting your capital while growing it. The next time you evaluate a mutual fund scheme, don't just ask, how much return did it give? Instead, ask, at what risk? That's the real game changer. And remember, IR works best when comparing funds with similar investment styles. You wouldn't compare an all-terrain SUV to a sports car, right? The same goes for funds. Because real wealth isn't just about how much you make. It's about how well you make it.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.